Good morning, everyone, and welcome to the On Time, On Target Morning Brief. Have a great show for you today where we're going to talk about a concept which I just heard about this morning, but I think it's really cool, where Target, the store, the department store Target, is now opening a series, and it's going to happen this month, of Apple stores within the Target store. So pretty cool idea. So it's going to be like a mini Apple store. It's not going to be a full Genius bar. They're not going to teach classes, like the full Apple store experience, but you are going to be able to talk to an Apple person, get Apple products there, kind of directly, which is really pretty neat. Target has done this in the past. They've done special Levi's stores within a store. They've done Ulta, if you're familiar with Ulta, store within a store. So really pretty cool concept. Which I think it's going to help Apple stock, because Apple stock obviously has been selling off hard. I also have Target stock in the book. If you're going to go with a retailer, Target's a pretty good way to go. So we'll look at both those charts today and kind of peel that back. We will also talk about the continuing saga that's going on with Wall Street bets and executives tweeting things out, and why did GameStop double yesterday and then triple this morning, that sort of thing. But we'll talk about, the standard GameStop, AMC costs, and what's going on there with potential, manipulation of the markets, and should there be some regulation to hop in and kind of stop the insanity here. So that's what we're going to talk about this morning. If you're catching us on replay, thank you so much. Make sure you subscribe and click the notifications bell. If you want to join us in the morning, what you don't see off to the side on the replay is there's a chat room and a Q&A window with stuff blowing up in it. And during the course of the morning, I check that out and I answer questions and interact with the folks who are in the room. If you want to join us, it's $25 a month to invest in yourself. And with that, let's go ahead and get started. All right, welcome back, everyone. Here's our lineup card for the day. Get it shared out here. All right, make sure you have your chat window set up appropriately with all attendees there. And good morning, Predator. Thanks for chiming in. Yeah, I agree. I think it's both good for both Target and Apple. It's a win-win in my book. So we'll peel that back a little bit more. Standard disclaimer applies. This is a financial education presentation, so you have to do your own due diligence before acting upon anything you hear this morning. Full disclaimer information is available at ototnow.com. All right, welcome to Thursday, February 25th. One more trading day in February. Today and tomorrow. We'll close out February. And again, the first 2 months of 2021 in the books already. So it's kind of moving fast, especially with all the craziness we've been having, especially in the Central Texas area here. All right, mission objectives are going to grow our money, protect our money, live off our money. Again, focusing on growing our money today. What are the hot themes that are out there? What are the things that are going to take stocks higher, specifically individual stocks? And in this case, looking at, who stands to benefit here, Apple or Target or both, right? So I think it's going to be both. We'll take a look at the charts. You can kind of make a determination on which one you like better. Excuse me. Target has a lower PE, but then again, when you think of all the upside that Apple has, and honestly, if you're betting on the future, which you should, right? You're not worried about what happens day to day, any of that crap, which people get all wrapped around in. And we, took to the soapbox on Tuesday when the world was ending, right? Who cares? If you don't get concerned with the short-term stuff, but if you're thinking long-term, does Target have an advantage within the space of, your Walmart's at a lower price point? You're going to pay 10 cents an item more to go to Target. It's a little bit cleaner, a little demographically, possibly a little bit different. Costco and Sam's are kind of your big wholesalers off to the side. It's a pretty competitive space, and then you have Amazon, right? Keyboard warriors, click, click shows up on my front door. I don't know. I believe right? That's my go-to for myself. It's not for my family though. My family still enjoys kind of going to the stores and picking things up. But does Target have an advantage? Well, they have a margin advantage, I think, because people like the experience a little better, and they're capitalizing on that. When you think of, does Apple have an advantage? Well, yeah. Long term, what is the game changer for Apple? It's not the iPhone 13, 14, 15. All those will be fine. It's not the next AirPods. It's not the next, Beats headsets, or, or the home products or any of that stuff. It is one thing. It's the iCar in 2024. So you invest now, and basically you sit on your Apple shares until this iCar thing either plays out or it doesn't. Apple tends not to miss. If they miss a little bit, there's been Apple products that have missed. Apple Home, where it's kind of like taking over for Amazon Alexa, it just missed. The product, which weird, is the product was actually kind of perfect, but people just didn't like it because they're all used to the Alexa thing. So it's kind of like product didn't really miss, it just didn't really fit with people who want it. But I think the iCar, same thing. You're investing in Apple now for when they release their fleet of iCars later on, and being able to get in your car, put in your Apple ID once, and have the entire ecosystem available to you at your fingertips in your car, I think is just a fantastic thing. So I obviously am very bullish on Apple, and would recommend that for anybody out there. If you don't know what to buy, just buy Apple and you'll be fine, right? All right, some questions today. What are the sources of tax revenue? It is tax season, so I'm getting a lot of tax questions. Income taxes are a piece of it, and your brokerage accounts. Obviously, I don't even care if you've got a $500 account. If you're bebopping in and out of stuff, yeah, you're generating some tax forms, and that has tax consequences. So we're going to talk about that. Okay, our flow today: long, short, open, short, long. We're going to do market review, headline review. We're going to take a look at Apple and Target. We'll get into short-term execution. I do have some longs and shorts here in the window. Let me repeat those for folks that are joining in as I'm talking here. Do have the Wall Street stuff. That stuff's in motion. So, hey, if you have a trading system where you just need something to move, knock yourself out in those names. They're going to move today. If you're using my trading system, then the longs and shorts there are in the chat room. Okay, let's go over to for academic resources and contingencies. Those are standard. Let's take a look at where we are in the market. Again, a lot of drama. Let's go to the S&P 500. Again, left to right. We're looking at a 9-month span. So we've already scrolled out of the March big sell-off back in here. So kind of a straight line up. So again, even though we've had some volatility of late, it does have the automatic channel lines put in here. We are still in an uptrend. Nothing changes because tech sold off a little bit. So don't let those things knock you out of your game or take your entire portfolio to cash just because we have, a thunderstorm in paradise on occasion. It's going to happen. Do not let it shake you off the, you don't quit boxing because you get punched, right? You expect that you step in the ring, you're going to take some punches and it's going to hurt. And you may even be laying on the mat, but you get up and you get back at it, right? Because it's a long-term win. So nice move up yesterday. Dow, of all things, hitting all-time highs, which is a little bit crazy. But don't worry, that money is going to flow back into tech, and the NASDAQ will be on fire again. Here's your S&P 500. Yep, we had the dips, and now we're moving back higher. A little negativity going into the open, so we'll take a look at that here in a minute. And then for our chart setting up for today, XL is a long that I like. It's they got a new contract for electric vehicles for UBS and a bunch of stadiums and things. So nice big fat contract, if you will. That's what's moving it higher. And then both the pizza companies, Domino's and Papa John's, missed earnings, guided down last night. So both are kind of selling off, and makes you kind of wonder if we're coming out of the sit back and order pizza mode and try to get out to restaurants, which I think is true. So I think those stocks, you have to kind of step out of those names now and let them come in. So that's what we're going to take a look at for the day trading stuff. Go back to our headlines for today. Here's the futures. Everything in the red across the board. Not a whole lot with the Dow, but certainly down 1% in the NASDAQ again. So that'll be the overall theme of the day for sure. Will be interest rates are going higher and tech is selling off. All right. Europe pretty mixed, not a big deal. Asia bouncing off yesterday. Remember, they were down almost 2% yesterday, so no worries there. There's our numbers across the board from yesterday, so pretty good. bounce off of the Tuesday sell-off, if you will. Here's your 10-year. And again, we've been talking about, oh my gosh, it's going to hit 1.3. Oh my gosh, it's hitting 1.4. Well, guess what? It's 1.46 now, if you will, probably going to 1.5. So interest rates, highest level in more than a year. You see the headline. This is scaring people, but not really scaring, certainly not scaring the masses. The masses aren't even following this. But the professionals are like, oh gosh, interest rate increasing environment, that's a big sell signal. It's like, okay, but it's one of the forces that acts on a market. So don't forget there are several other forces. I don't know, huge stimulus bill going to get passed tomorrow, likely. So I think that's going to be the if today's not a green day, I think tomorrow will be a green day based off of the passage of that. All right, oil above 60, gold and silver not really changed all that much. Bitcoin back above 51. So I don't know if you heard Kramer earlier. He put out an interesting thesis though of what if GameStop decided to pivot their store, put crypto on their balance sheet. And we're not talking just Bitcoin. We're talking all of the cryptos, right? Crypto Nation, where there's like 50 of them. There's probably 50 new every day, it seems. Hard to keep track of, so I stay out of the weeds on that stuff. But I know some of you may get into that, and if you are, good on you. But basically have GameStop reinvent itself to a like crypto clearinghouse where you play games, and instead of paying money and stuff in these games for weapons and skins and all of the, the standard stuff that goes, the mini economies that go on within a game. We talked about Roblox, excuse me, and Robux. Change all of that to a crypto-based type economy where you're actually like playing games and earning Dogecoins and things. Interesting thesis. If that's the case, then yeah, the stock does explode higher. Minimum wage, I don't think so. In the chat, Predator throws out, if we do see the minimum wage go up to 15, yes, it's an additional expense for some small business because there's going to be a group that are affected directly by this. But in mass, I actually kind of think it's an okay thing. They'll survive that, right? So you, if you will, you're the waitress example that I use. If normally Chuy's has 15 waiters and waitresses on staff, well, guess what? Chuy's don't care. Chuy's is going to go, well, if that's a policy, that's a policy. Here's my employee expense. So now I'm going to have 10. So I'm gonna let 5 of them go. But now I'm gonna have 10. And unfortunately, during that now, instead of having 12 tables, you're working whatever the math works out to, 18 tables, right? So you're going to end up seeing these people having to work a lot harder because they're going to be covering more because the businesses are going to pass this on, right? Or they raise the price of nachos from $8.99 to $9.99 and just pass it right to the consumer. So I think, yeah, it's a little bit of a hot button issue, but I think it is immediately, it'll get it digested in my mind that fast. That's my take on it. Obviously a lot of people are going to complain about it, but just like COVID, businesses will adjust like literally instantly. You're going to adjust to a new business model, new constraint, right? And you're going to move forward at lightning speed, making money and providing your products or services. So if it becomes $15 minimum wage, it is, then press on is what I think will happen there. Okay, back to get on the right page here, back to what we have going on today. Yeah, GameStop surging, blah, blah, blah. It seems like it's in there every day. Twitter was in the news. I don't hold Twitter as a stock, but I do have to agree it's kind of gaining steam, post-Trump, right? So it was obviously it was hot while the president was on it, but now that it's, we're past that phase, is it still an effective means of communication? I check it, multiple times a day. I like to see what Elon Musk is up to. More curiosity than market moving impact. But certainly when he says some things, it's he's generally not wrong. So it's something to consider. Okay, Robinhood in the news again yesterday. Again, Vlad had his duking it out with the guy from Barstool Sports. Pretty good debate if you want to listen to it. Portnoy, I think is his name, David Portnoy, if I have that right. But realize Robinhood is said they're supposed to IPO this year. So we'll see. We'll see how bad the blood runs deep. I have to imagine there's a lot of people just don't care. They're not going to leave Robinhood just because they got screwed one time. But they would have left already. right? I picked up some accounts from it. But, if you stuck with them through this, I think you'll stick with them in the future. So we'll see how that IPO works. All right, vaccine stuff seems to be going well, which again, with the better the vaccine stuff works, the more you get to affect things like Domino's Pizza and Papa John's, right? So that's kind of why they're selling off in addition to missing earnings. All right, transition to our long-term topic of the day. Again, Apple stock has been hit. If you are a large Apple, if it's your number one holding, like me, and like many of us out there, yeah, it's been significant. 144 down to 125, kind of resetting back to where it was, pre-election. It's like, come on, man, we had the big split. Well, when you have a split, the stock tends to run up a little too much, right? It's going to overshoot to the upside. Then you have this digestion period. I do think we're at the bottom of a channel. I think you can buy in here really with no worries at all. So really, your only worry is, do you have too much Apple? And if you do, don't buy more, right? You just have enough. You don't need to add here. But if you don't, pick up some Apple shares here. 4 shares, that's $500. If you got it, add some zeros onto that. If you're swinging a bigger bat. But yeah, I mean, what an entry point. When you look at the valuation, you get a little dividend. So if you hold a lot of it, that's generally enough of a dividend at 0.65 to be able to pay for your Apple products for the year. New phones and stuff coming out of your Apple dividend. Kind of winning if that happens, right? So anyhow, that's my push for Apple. Do what's right for you and your family. All right, Target stock has run up pretty big from a 120 all the way up to a touch 200, which was kind of a glass ceiling for it, or the Black Widow moment. Hit 200 and it's like wham, right back to 180. Kind of in a digesting period here. I do think that Target leadership is probably the best out there as far as maintaining their brand image. Their advertising is on point. They do try to paint the ultimate clean store. Just all the things that might irritate you about Walmart is they're directly targeting against that, right? And then Target, haha, but they're directly marketing against that. So that's why a lot of people really like the Target and Target experience. I think it's fine here. I would not have any expectation that Target's going to be at 1,000 in 5 years. Apple can do that. Target's just not going to have that multi-year upside that like an Apple would have. Now, probably more safety on the downside, but it's just not going to have that outside. So if you have some, that's fine. I wouldn't have a ton of it and have any huge expectations about it. All right, let's get set up for our day trading stuff. Again, we're looking at XL long and both the pizza firms short. Hello, everyone, and welcome to the On Time On Target play of the day. We have 30 seconds to the market open, and you have 4 screens in front of you on the TD Ameritrade ThinkPipes platform. On the left, we have the overall market. The futures are in the red, and they've been kind of trending down into the open. We have one long that we're taking a look at, XL. It's an electronic vehicle maker that just got a big contract. We have DPZ, which is Domino's Pizza, gapping down, as well as Papa John's gapping down. High price points on these, so just be careful when you trade those. You have your stop set. There is the opening. Kind of looking at this XL first to see if it sets up. Again, when I'm thinking a $15 stock, I'm thinking about a 20-cent stop, if you will. So we'll kind of let it set the low of the day here in the first minute. And then from there, we'll draw a line and then we'll take it, trying to get, again, that 20 cents off the low and then ride it higher. You can see it's up 6%. For our 2 pizza firms, down 6% and down 8% respectively. Again, Domino's Pizza is at a $340 price point. So if you hop in here, you're probably best off if you use a $4 stop. We'll zoom in on this a little bit. Again, you'd want to see it go up and establish that high of the day and then turn around and roll over and take it to the to the downside. In terms of your R, you can see this from 340 up to 343. If you're using a $4 R, that's a 1 R move right there already. So just consider. And then, all right, for Papa John's, XL selling off here, establishing that new low of the day. For Papa John's here, you've got not as much volume, but again, you're looking for it to set the high of the day. You can use about a $1 stop. So again, When you think the low down here is at 92, it's already up at 95 though. So if you get an entry point around 94 here short, then that should cover you all the way down to, protect you from the getting stopped out, and then give you that opportunity to get 3R. Not in love with any of these yet, so we're going to keep an eye on things. All right, this bottomed out at 1543, so 1563 would be kind of our entry point to the upside. Do have some positivity in the market here. I like that, so that favors the long. Plenty of volume coming into this fleet. So I'm looking at taking this long, 15.6. Just gonna make a little note for myself there while I look at some other things. All right, this DPZ, don't really like it short with the market going higher here, so we want to take a look at some other of the long names. Norwegian Cruise Lines, I'm not obviously a long-term holder of the cruise lines, but certainly starting to get some love. This is a vaccine stimulus, kind of get out of the house sort of play, if you will. Don't really like that entry point there. Let's take a look at some other longs. ALT, check my notes. They have a new COVID drug out. Altimmune is the company. They were gapping up earlier and they're not. All right, so gonna miss the entry point higher here on the XL, which makes me kind of mad. You can see how you only had a fraction of a second, so if you weren't staring at it. So again, don't take it here just because it just striped up like 2R right there in that minute. So at that point, you have to admit that you missed it. So we'll see. All right. See if it comes back down. Maybe we get another chance at it. Maybe we do not. All right, let's see what else we have out there. Teladoc was a short. Again, same thing, vaccine plays. The theory is there's no way they can keep their revenue base that they've built during this pandemic. So don't like the entry point there, so not going to take a look at that. Excuse me. Let's look at GameStop real quick, see what's going on there. I'm going to back out here a few days. So here's your, sold off. Most of the weak hands got knocked out of the game here, down at 40, eat your losses sort of thing. And then yesterday it goes from 44 up to wherever it closed in here. It's kind of hard, it's a little congested. But anyhow, kind of crazy, right? The price action, I think this is a clear short. I would not get into a GameStop long at all here, but you have to be ready to pay the price if you get in there short. That is for sure. Let's take a look at AMC. Same sort of thing down here at 550. It's doubled in the past 4 days or so. So again, it's certainly in play. So if you need something to move, it's moving. And then costs up 60% on the day. Again, this was kind of, I call it kind of the, GameStop's first, like AMC is second, and then you have costs is kind of like a derivative play. If you miss those, then you get into costs, right? And costs has gone from $12 all the way up to 38 or so. All right, let's take a look at, again, nice, 6 minute move up. Looks like the Dow's getting ready to be positive here. Even the NASDAQ the Dow is positive now. NASDAQ and S&P are right around even. So I think we're going to see some green going into the stimulus for tomorrow. All right, let's take a look at what's going on around the book. Twitter up 11%. Moderna up 7%. Empower, that's been selling off hard. You do have GBTC, so let's take a look at that since that's in more and more portfolios every day. Yesterday, I sold out a Workhorse and bought Bitcoin for most folks. So, had an entry point in that 47. It was morning, so 47 to 48, wherever I was in there. For sure, don't remember. That's working out. I do think, again, as folks, CFOs out there are talking about putting Bitcoin on their balance sheet, the more they do, obviously, that's less less supply. So that helps the price go higher. All right, Luckin Coffee on the march higher. Let's see what Luckin, it's about what, 20 cents then, 21 cents. So kind of some love. I wouldn't necessarily hop in and buy it now and thinking everything's safe, but certainly showing some strength after all the negativity of the Chapter 15 filing that was out there. All right, let's look at the downside and see what we have. Mineral, that's an Austin-based minerals company. Verizon was up 3 yesterday, selling off a little bit. NEO, we haven't talked about NEO in a while. Again, sold off all the way down to 41. 2 days later, it's back up. Again, it's hard to justify the valuation here for NEO, but it's kind of like Tesla, just for China. It is their number one EV maker. Okay, looking for some other names in here. Don't really see anything of note that is moving. So again, more big names to the green there, if you will, than there are in the red. All right, let's go over to talk taxes. Everybody's favorite thing to talk about, but you can't. You do have to understand what is going on here. Here it is. You have to understand taxes. If you're going to play in the adult games, then you have to understand the adult consequences. So first of all, within your portfolio itself, when you make a move, if you are in a taxable account, then every time you make a move, there's tax consequences. Obviously, if you buy something, you turn around and sell it, you're either going to have a capital gain or a loss. I mean, you magically could be at that exact point where you bought, but for the most part, you're going to have a gain or a loss. Those are going to add up over the course of a year. If you're a more active investor, then those are almost all going to be short-term gains or losses. If you happen to hold things for a longer term, like you're a disciplined long-term buy and hold type investor, again, that's how I am. I'm not going to tell you that's superior, but it's superior for how I think and how I invest with these long-term themes. And it helps me out in taxes too. So if you hold it for over a year, then you get some tax benefits whenever you sell it. There is talk of taking that holding period from 1 year to 5 years. That's a full marriage, right? If you buy something and hold it for 5 years. So very few names are going to meet that. Apple, Amazon, Home Depot come to, those are like, okay, I could hold for Disney. Those are names you can hold for 5 years plus. But then again, you got to hold Disney through, pandemic. Maybe you didn't want to do that. But those are your capital gains. Also in that account, if you hold Apple, even if you hold 1 share of Apple, you're going to get a dividend. When that dividend pays out, that goes on a 1099 DIV. So you also have dividend income for any of the stocks that you held through the ex-div date. And then also, if you have any cash in the account or if you have bonds in the account, those pay out in interest, generally on a monthly basis. So you may have interest. So within a taxable brokerage account, you have that, your capital gains losses, you have your interest, and you have your dividends, and there's also some Section 199 stuff. You have your investment expenses, which you get calculated in there as well. So there's a lot of things just going on in a taxable account. If you have a Roth or if you have an IRA, Roth, traditional SEP, you don't have to worry about any of that stuff, right? It's tax free, or it's tax consequence free until you take money out, and then that's the backside there. Okay. Predator, I see your big question there. Let me finish the thought here, and then I'll pivot to that. So that's within your brokerage accounts. So income tax is what everybody's talking about because it's income tax season. But realize this is only one of several taxes that the government has. The corporate tax, which again, if you're like myself, where I pay individual taxes, but I also have 2 businesses. The Afterburner Financial is one business, and then the On Time on Target podcast is another business. So both of those have Schedule Cs, which I have complete separate books. I pay separate taxes on those, and that's a corporate tax rate. So when you think of, I'm paying pennies, right, compared to somebody like Apple or Target, they're paying billions in taxes. Okay, sales tax is a pure consumption tax. So when you go buy something and they say it's $1, why do you have to pay $1.08? Well, those are called taxes, kids. So you should know that by 8th grade, or from operating in the real world. So that's more consumption. If you don't buy stuff, you don't pay a lot of it. If you buy a bunch of stuff, you're going to pay a lot of it. property tax is an ownership tax, right? So if you choose to be a property owner, you will pay some taxes to your state for the privilege of being able to own that property. So again, when people are like, hey, I bought my house for $300,000 and I sold it 10 years later for $350,000, I made $50,000. It's like, you probably didn't. You might not even have made anything, because you paid property taxes, you had maintenance that you had to take care of the house during the time. So there's all these things with home ownership that people just kind of just hand wave, like, oh, well, I would have had to do that anyway. It's like, no, you don't. If you rent, you don't pay property tax. Don't pay property taxes. There are billionaires out there that are not property owners for this very reason, right? They want to rent. They're like, somebody else is paying that tax, not me. I'm not that extreme. I like owning my own property, but we'll see. Tariffs are others, fair trade stuff. So thinking stuff coming into the country, we're bringing in some money that way. Also, what's not up here is there's also sin taxes on your cigarettes, alcohol, gasoline, if you will, and some other things out there. Hopefully marijuana gets a big sin tax on it. Lottery taxes, those sorts of things are a revenue generator off of things that people are going to buy anyway. Doesn't really matter what kind of tax you slap on it. And the last one we'll talk about is the estate tax, which a lot of people don't think about unless you're in this particular business. But the estate tax is when you pass away and the money passes on, through an inheritance. If it's above, right now it's at 11 million. So a fairly sizable number before you have to worry about it. But if you get above that, you're looking at a huge estate tax. So again, that's the ultimate in the wealth tax, if you will, is the government wants you to be wildly successful. And then when you pass away, wants to take a big chunk of money before you pass that on to your, good for nothing kids, right? So they have to make their own money instead of just riding off of your money. It's kind of the theory. Right now, like I said, the estate tax is up at around 11 million. I don't expect that to continue. That's pretty high. I could see it coming back down, but probably not all the way to 1 million like it was. But, if you think of a person that probably goes to college or right into a trade, like a plumber, but basically someone that commands a six-figure salary for most of their life, the net worth of that person, if they save and invest, is generally between $1 and $3 million. So you just kind of, over a lifetime. So that's kind of the goal. So if you kind of don't affect those people, you're fine. So I could see it coming down to around 3 million or so. To get over a lifetime to get to over 3 million, you have to almost be a business owner. You can't really do it with a pure wage unless you're like the super high wage earner, right? So anyhow, a little bit of a theory there on taxes. All right, let's check out the chat here. Explaining to a new investor yesterday on the basketball court. Yes. Yeah, Uber rides and sports, right? The best time to talk stocks. Count crypto, marijuana, even a call on Snap. You have to pay taxes on gains. He had no idea. Suddenly the government tax rates became real to him. I like it. Of course, I said if you are talking small gains, you probably wouldn't notice. But if you hit it big and sell, you'll be on the hook. Yeah, so when you think of, let's take that to the extreme, right? So, I mean, first of all, it's an ultimate win that, when I hear you're on the basketball court, I'm thinking younger crowd. No, you may not. I don't play anymore because I am too old. But for those that aren't, you might be playing with some younger folks. You're right. That may not know the sorts of things. So yeah, you're right. If they score big, yeah, 30 years old. Okay. Yeah. May or may not have a lot of experience depending on when he or she started, back in the day. But you're right. You think of this Keith Gill guy, the Roaring Kitty guy, he made 35 million, then he lost a bunch of that. And then, I don't know, he's still netting out, $7 million or something. Well, he's going to have to pay a huge chunk of taxes on it. And of course, it's all short-term. So it's taxed as an income rate. So he's, in addition to, good on him, high fives, American system, no matter where you fall on the side of you should or you shouldn't have been doing that. Either way, he did it and he gets the money, right? That's the American way. But yeah, probably getting a super smart lesson, getting super smart on tax implications of all that. You still want to make the money, even if you have to pay more in taxes. People ask me all the time, they're like, hey, I want to reduce my tax bill. I'm like, okay, well, I can buy you crappy stocks that can go down, you can lose money. Let's not do that. Or they're like, I want to go into municipal bonds. And I'm like, well, if you just loathe paying taxes, then we can do that. But you will make less if you buy tax-free bonds than you would if you hold regular bonds and just pay the taxes. mean, you net out the difference, right? And generally with my clients, I'm thinking you want to make the mostest money at the end of it, right? And it's shocking that some people are like, well, it's like, okay, well, let me know if that's not the case, because I'm trying to make you a lot of money and we worry about the taxes later. We'll mitigate it along the way where we can. But again, the goal is to make the mostest, if you will, netting everything out. So, all right, a lot of good talk today. Thanks for chiming in there. All right, everybody else, we will see you back on a Friday morning.